Hi, and welcome to advice for round 6 and review of round 5. So, looking at round 5, there's a number of teams here: Zero to Vroom, 700 points, Favor Autos, 600 points, AdMech, 581 points. So, some teams earn a significant amount of points in round 5. And gross profit margins for some teams are at 72% for strategic investment. ASPAR Motors 65%, AdMech 61%, Automark 60%, Zoom to Vroom 60%. So these, by round 5, you should be in the 55% range. The 50 to 59% gross profit is average, I think, for round 5. But people in the 60% or higher in their profit margins, the gross profit margins, are doing very well in round 5. Now, round 6, everybody should try to move into a 60 percentile or 70 percentile gross profit margin. And we see here that there's still a few teams that, no matter how many videos I make saying you need to be over 40%, are still below 40% gross profit margins. I guess they're not watching my videos of my advice, but these profit margins, you have to maximize shareholders' wealth. Shareholders expect profit margins to increase year over year, every year. So how do you do that? You increase prices and you decrease costs. Okay. Now let's look at the cumulative points. Some teams have already made it over 2,500 points. We have a number of teams here. It looks like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 teams already made it over 2,500 points. It doesn't mean you stop competing. You want to finish the simulation because you don't want to lose points by not making any entries. Now, and the number of teams are over, most teams are over 2,000. We only have a handful of teams that are struggling below 2,000, and they really need to kick it up. Still not impossible if you're at 1,800. We have 3 teams at 1,800 to get to get a final 700 plus points to get the 2,500 needed for the A in the project. Now, let's review. I made some entries for round 5 myself. Here are my results in the solo practice. I was able to increase my profit margins from 61 to 69, operational from 35 to 45, and net from 25 to 32. So this gave me a lot of points, as well as reducing my debt, increasing my revenues by 40%. I was able to, because my profits increased, I was able to increase my return on equity, my earnings per share, my return on assets. Now, total asset turnover I did improve, but this is an area that's difficult for a lot of teams because you're buying and taking on so many assets. When you're expanding your assets as fast as you're expanding your sales, it's hard to really get a high multiple in total asset turnover. So the only way to really guarantee a high total asset turnover is to have a high amount of sales. But if you're sacrificing profits to get more sales, you're going to lose points in all your profit margin categories, and earnings per share, return on investments, return on equity, return on assets will all suffer. So that's why it's much better strategy to focus on profit margins rather than trying to focus on maximizing assets at this point. So my forecasts were coming in lower here, and improvement in the same. So my forecasts were a little spotty, but I did increase my operational investments, and I did have a surplus. So I earned 545 points for round 5. I'm moving into round 6. So what I'm going to do for round 6 is, of course, review my assessment area, and I see, my total asset turnover is not great. It's poor. Why? Because I invested a lot of money in operational investments, and I invested a lot of money in my factories. I'm fine with my total asset turnover being lower because I'm building up my auto company, and I'm taking a lot of assets, and I'm focusing on profits. So I'm not focusing on maximizing sales to leverage my assets. I'm focusing on maximizing my profits. And that's more important because profits are tied to far more categories. So you can't be perfect in every area. And as I pay down debt, it's going to be harder and harder for me to improve my return on equity, which is fine because I'd rather improve in other areas. Okay, so on my charts page, when I look at my charts, a very important thing to look at, of course, we see my sales are going up. My net profit's going up with a big increase last year. My net to sales are going up. Sales and both net profits are going up. stock prices going up, earnings per share took a big jump, our points took a nice return. And if I look here, I see that I sold out all my vehicles except for luxury. I could have sold, had demand for another 900 units of luxury. So this is why I ended up with some surplus inventory. If we look back to my production page, you'll see that I have a lot of inventory in my economy class. So I overproduced, overforecast, and the inventory fell into my assets and reduced my total asset turnover, and my return on assets weren't as strong as they could be because my aggressive forecasting. Okay, so once I look at the industry, see how my other competitors are doing, I'll go to my financials, review my financials, and then finally back to sales. So now sales, I have increased my operational investments from $9,000 to a $12,000 reduction, which is greatly needed because the customer expectation ranges have increased, and I was able to increase my profit margin on my economy from 77 to 83%. I was able on my sedan to increase, again, customer expectations are growing up. I have more operational cost reductions. I was only able to increase my gross profit from 69 to 72%, but I increased my forecast as well. On my truck, I was able to go from 65 to 70% based on giving my new truck better number of features for luxury, safety, power economy, and reliability because the expectations are going up. So I'm trying to make my truck competitive because I had some leftover inventory there. And finally, on my luxury class, again, I increased the development and the characteristics of my vehicles, and I was able to move my profit margins only from 66 to 68%. But I under forecasted my vehicles last time, so I'm going to forecast a little bit higher on the vehicles. So I did increase my marketing as the marketing estimates increased as well, so I increased my marketing. And then going into my production, I didn't have to build any economy class vehicles. I had a lot of inventory left over, so I used my leftover inventory to get my production. So that was good into buying the assets and new factories here. I'm maxed out on my operational investments, and I want to keep them maxed out. I don't want to reduce them because I'll lose points if I reduce them. In sedan, I'm buying 2 factories, and I'm increasing my production. In truck, I don't need to buy any factories because I have enough leftover vehicles. So I'm just making the production of 4,148. And then on my luxury, I'm buying 3 factories because I greatly underestimated the sale last time, my sales demand, and I'm forecasting 8,000 units. And now moving into finance. So for finance, I want to retire. I want to retire some short-term and long-term debt and some stock equity. Okay. Because I have a pretty big surplus of 592 million. Now the surplus is going to go into assets, and that's going to, again, my assets are going to increase because I have so much cash here as a surplus. So I don't expect my total asset turnover or my return on assets to really improve that much because I'm really generating a lot of cash here and holding on to that cash. Okay, so let's see how I do around 6. So I complete round 6, and here for the last round, I was able to get 389 points. So I was able to increase my revenues by 37%, increase my quick ratio, improve my quick ratio. My debt ratio didn't improve too much. Gross profit margins improved about 5%. My operational net profit margins improved by 11% each, and this gave me a strong. Actually, my total asset turnover did improve. My return on equity was basically stayed flat. Earnings per share went up by 50%. Return on assets went up by 41%, actually pretty good there. My forecasting was pretty good except for economy. I guess I over forecasted on that. and I had a surplus in cash, so I had 389 points for the round. As far as my, let's look at the charts here. Actually, just curious about my performance chart. So I was able to increase sales, increase profits for the last year. My stock price is at $259, earnings per share at $43. Points went down a little bit from the previous round, and I maxed out all my sales potential. So let's see, looks like I had some leftover vehicles. That's okay. So if you look at the class rankings here, my company, I scored a total of 3,299 points, which is a personal best for me. I've never broken 3,100 before, so in this particular practice game, I was able to break 3,200, and almost 3,300 here, which is very good, blowing away the other two computer players. Okay, so I hope this is the last sort of hints I'm giving and overview of things you want to do. And remember, you have to increase your sales and your profit margins. If you see that your profit margins aren't beating last round's profit margins, do whatever you can to get those profit margins up, even if it does mean sacrificing some sales or sacrificing some demand potential for your vehicles. You gotta show investors that you're improving those profit margins, and that really helps to get a lot of other benchmarks up. So hopefully you found this video helpful for your last round, and you can use some of these ideas to improve your game. And it looks like most of the classes has already reached the 2,500 level. I'm hoping by the last round, the rest of the class gets there, so everyone gets a perfect score for this, and we'll see what happens. So best of luck on Saturday, and thank you